My name is Marcelo Cruz. I'm a professor at New York University. I'm the editor-in-chief of the Journal of Operational Risk, and I'm an editor of a number of publications as well. I have published 4 books in the past. One of these books is a best-selling risk, more than 20,000 books sold, called Modeling, Measuring, and Hedging Operational Risk. And I'm glad to be here in Mexico. Rules are necessary to tame, but I agree with you that there are too many. So, and I think there is an exaggeration of the number of rules that exist. So, for example, the Volcker rule, for example, not allowing banks to take proprietary positions, you say don't take risk because risk is bad. So it's making a very strong assumption that taking risk is something that can break a bank. But of course, they totally take the credit away from doing good risk management, right? So risk management is key on these rules. So it's managing risk well. It's managing risk is more important than saying banks don't trade or don't do deals. And people can go away these rules as well. So you can see examples that banks that say, well, we're not doing proprietary trading, we're just hedging our positions, which is allowed by Volcker rule. So that's one of the things that can happen as well. So people always find ways to go around the rules, and then need to create more rules for the part people write. So it creates a big chunk of lawyers, a big chunk of bureaucracy, which is never good. I mean, it doesn't mean necessary corruption, but it means that it makes a harder environment to operate. It makes harder for banks to take risks, and make money, and lend to other firms to make more money. So, and that's probably one of the reasons why the economy is not progressing. Right, the GDP is still very low, etc. Is because we probably don't have the financial market is strong and lending to most of the firms, most of the economy, other economic sectors. It's hard to say. That's very tricky. Does the new regulation that we have now will save all banks in the future? No, probably not. Probably going to be other cases. So you see, after the new regulations, we have banks like we see events like there's nothing to do with market and credit. They have internal frauds of $2.5 billion, $7.5 billion. So they're still losing a lot of money with things that regulations do not protect, right? So not necessarily there's new regulations against that. So there's always going to be other risks. There's always going to be other things that can happen, although you have all these regulations. So having more regulations. So in 10 years from now, we're going to have even more regulations if you don't take care. So we don't necessarily saying that we're going to save more banks because of that. Maybe we're going to save some, but you're still going to have many banks that will go down despite this big number of regulations.